Be strong.
Welcome back to another episode of Wealthy Choices with Steve and Tyler. This is the fourth segment of our Regional Opportunities Investment Tax Credit.
It's so big we had to break it down.
Yeah, we have 4 segments in this one. So we talked about what the credit is. We've talked about who qualifies. We've talked about what qualifies. Now it's time to get into the nuts and bolts of this, Steve.
Yes.
So, how is this credit calculated?
All right. So it's important to know that this credit is enhanced right now. We talked about that in an earlier segment about how from March 24th of this year, 2021, through to December 31st of 2022, purchases or renovations during this time period get the enhanced credit, which is double.
Right. It used to be 10%, now it's 20%.
Exactly.
Wow. Okay.
So, the first $50,000 that you spend in Class 1 or Class 6 assets, as we described in the last video, do not qualify.
Okay.
So, for everyone who's done $50,000 or less in purchases or renovations, sorry, those don't qualify. And anybody that's done over $500,000, those don't qualify either.
Wow.
Right? So it's for the sweet spot between $50,000 and $500,000 that this credit gets calculated.
Okay.
Up to 20%, or it's 20%.
Wow.
So where do we get our numbers from? The $270,000 we've been talking about is over multiple years. It is possible for you to claim this in every one of your corporate years. So if you have a corporate year end happening at the end of September, and you've already got purchases of $500,000 in this current period, you could be claiming to get $90,000 back.
Wow.
Right?
Yep.
$500,000 worth of purchases of buildings or renovations to buildings minus $50,000 base that doesn't qualify gives us $450,000 times 20% is $90,000.
Wow.
Right?
Yeah.
If you were to then do it again next year, so in this example, we're saying if your year end is the end of September, so if you were to buy or renovate again in the period of October 1st, 2021 to September 31st, 2022, you could qualify again for another $90,000.
Wow.
And then that still gives you 3 months to do that a third time, right? If you were to renovate or buy a building between October 1st of 2022, and as long as the property was available for your use before December 31st, 2022, you would claim this credit on your 2023 tax year end.
Well, my brain right now.
Well,
explained it well, Steve. You explained it well.
Okay, because you know what? Year ends that don't match the calendar are confusing to everybody. They are.
Sure.
It really does get confusing. And we spent a lot of time on hold with the government first to get through to talk to somebody.
I'm sure you do,
like literally hours. And then hours talking to people about the dates and the timing of these credits. Okay?
Yep.
And it can be confusing. The advanced calculation stops at December 31st, 2022. But that doesn't mean that has to fall within your year end.
Right.
The language says that the building has to be available to use by that time. Even if you file your taxes somewhere in 2023, because that's when your year end falls, you still qualify for the tax credit as long as the building was available for use, or the renovations were available for use by December 31st, 2022.
This might sound silly, but when you're saying available for use, are you saying completed, the renovations were done? Is that what you mean by that?
Yeah, so the language in the government is using is available for use. My interpretation of that is a building is closed if you're buying something and available to move into. If it's a renovation, it might be an occupancy permit. If you're building a new building, rather, it might be an occupancy permit. If it's a renovation, it would be substantially complete. So what you can't do, things that you can't do, you can't have a building bought on paper but not owned yet. Right? You can't have renovations started. You can't go out on December 15th of 2022 and buy all the materials and say this qualifies. It doesn't, because they're laying there. The renovation itself isn't done yet.
That makes sense.
Yeah, it has to be. Yeah, it has to be usable. Because the credit is for job creation. Like, that's one of the things they wanted to make sure that this is helping create jobs, and the space being usable is what's going to create jobs, not material laying on the floor.
Right. Yeah. No, that makes sense. Well,
I don't know if that's any good or not.
No, that's
perfect. You can get into the argument. You know what? Hey, I bought material. The store that sold it to me, that created jobs. The person that checked me out, that created jobs.
You're really just bending the rules at that point.
Well, right? So you can make a lot of arguments, but at the end of the day, the language that the government is using for this is that it has to be available for use. How is that going to be decided? Again, I think that if you feel like you're not sure if you qualify, you maybe don't, but talk to your advisors or give us a call here at the Tax Force.
Okay, Steve, all of that information is fantastic, but how do you claim the check?
That's a great question, Tyler, because it's great to know how the math is done, but, what I want to know is, how do I get the money in my hand?
Where's that money?
Where's the money?
Show me the money!
We need to be like shaking.
That's right. Show me the money!
The credit is claimed on your annual tax return filing. Okay. So your corporate tax return is called your T2.
Sure.
When you file your T2 corporate income tax return, there's a form that can be included on there that you make the claim for this funds.
So make sure you fill out that form correctly.
It's
like anything, right?
Yes. With any form, you want to make sure it's filled out correctly. It's something that has a big potential of being missed. If your advisors aren't telling you about this, or if they're not aware of it, they might not automatically fill out the form.
Sure. Yeah.
Certainly in the tax programs that preparers use, it's not a form that's automatically coming up and saying, hey, make sure you fill me out.
Yeah.
You have to know that this is something that you qualify for, and you're making sure that you're filling out the application as part of your tax return.
Awesome.
Right?
Yeah.
Now,
this is what our team here does at the Tax Force. They find these tax rebates, tax credits, sorry. They find these tax credits, and they more proactive than reactive is the word we like to use.
We certainly don't know about everything, but we do our very best to make sure that we're bringing to our clients the information that we think is going to be important to them. Throughout COVID, there's been so many programs, so many changes to these programs. It has been tough to stay on top of these. So, ask your advisor about this. If you're not sure, if you're not 100% confident that they're up to date, give us a call.
Yep.
Reach out to us, because we love to help.